Today, we need to talk about an important change coming up that impacts how we handle transactions involving real estate, specifically regarding the Financial Crimes Enforcement Network, or FinCEN. Starting the 1st of December, there's going to be a new reporting requirement for real estate sales, and it's critical that we stay ahead of these changes to ensure compliance and to avoid any penalties. So let's break down what we need to know. In the past, FinCEN required certain disclosures for transactions involving cash or other specific criteria limited to certain geographical areas. But now they're expanding their reporting obligations to include more real estate deals nationwide, even those that don't necessarily involve cash or a large down payment. From December 1st onward, FinCEN's new rule requires all parties involved in certain residential real estate transactions, including vacant land, to report the identity of the natural persons behind the transactions. This applies to both buyers and sellers where real property is transferred to a legal entity such as a corporation, a partnership, an estate, an association, or a limited liability company, with a few specific exemptions where that transaction is non-financed. And by non-financed, I mean not just cash transactions, but anything that involves private hard money lenders as well. In simple terms, if you're dealing with a property transaction where the buyer is a corporation, LLC, or other legal entity, your settlement service provider will need to report the beneficial owners of that entity, the real individuals behind the business. The goal here is to increase transparency and reduce money laundering and other illicit financial activities involving real estate transactions. As real estate professionals, this means you'll be asked to help gather more detailed information about your customers' ownership structures. As this is a legal requirement, there's really no getting around it, and real estate transactions can't close unless all the information needed is gathered. So what does this mean for your day-to-day business? First of all, there's documentation. When your customer is working through a corporation or LLC that triggers FinCEN reporting, the names, addresses, dates of birth, social security numbers, or taxpayer identification numbers of those individuals who own or control those entities will be needed. Second is reporting. This information must be reported to FinCEN by your settlement services provider starting in March of 2026. However, data collection must start for those closings from December 1st of 2025. Your settlement services provider will file the necessary reports, but it's essential that you help ensure the correct details are provided early on in the process. Finally, there's the increased due diligence. Early on in the transaction, verifying the identity of those customers, which may involve more paperwork and question, needs to be completed. This is all about making sure we comply with the law and protect the integrity of the real estate industry. And to wrap up, these changes may feel like a lot to manage at first, but it will not apply to most of your residential real estate transactions. Here at Watson Title, we'll ensure a smooth process for our sales associate partners and their customers. And remember, compliance isn't just about avoiding penalties, it's about maintaining trust with our customers and protecting our industry. Feel free to reach out to us if you have any questions or if you need some clarifications on this. And I hope you have a strong finish of 2025 and a great 2026.